So a lot is changing, right? Think about this over the last couple of weeks. Conventional wisdom about the viability of these hyperscalers, right? They can't keep spending all of this money. That's kind of shifted. In fact, significantly, there will be a payoff, and it's going to be commensurate with the risk. At the same time, conventional wisdom also improving on the prospect of SaaS, software as a service, survivors, and maybe even eventually some of these names thriving in the AI era. Although, right now, think about this. 71% of their bonds are marked at less than 90% of par. So that still means that there's some risk out there. I want to bring in Chris Grisanti, MAI Capital Chief Market Strategist. And, I want to take, you're looking at these SaaS names, right? We've talked about them before. You've had a couple of individual software names, but now you feel like maybe they've turned a corner. What's convincing you?
I do. Now, Charles, and your viewers got to remember, I'm the guy who was on last time recommending General Motors. So I'm a value guy. So if I'm looking at SaaS, something must be going on.
Right.
And what's going on here, I think, is they're tarred with the brush that AI is going to disrupt them terribly. And I think for certain names, that's not true. And in fact, you can buy some good names like ServiceNow and Salesforce for half the price they ought to be.
So let's look at ServiceNow.
Yeah.
Because, again, it's under a lot of pressure. I'm in the stock. It's my subscribers are, and we're down a lot, although, it's gotten better over here.
Last 6
From
weeks.
92 to 125 is a big percentage move.
Right.
It's right at the 200-day moving average. Where do you think it goes? Where do you think fair value is for it?
I think fair value is much higher, 40 to 50% higher.
Wow.
And now, look, my average holding period is 3 years, so we're in this to stay.
Right.
These guys will be around in 3 years, and my bet is that they use AI to tie their clients closer to them, and as opposed to other folks that may be disrupted. So I don't think it's a winner.
ServiceNow, and we're going to bring up CRM. One thing they both have in common, very popular CEOs. I mean,
Right.
these folks, Mark Benioff, Wall Street loves this guy. He's a champion on the left. I can't get him on the show, maybe that's why, but
Right.
I admire his work. I admire
Sure.
what he's done as a businessman. It hasn't rebounded nearly as much. There seems to be more questions about the seat model here.
Right.
Yeah.
No, so this is clearly the value play compared to ServiceNow. But this is the gold standard in client relationship management. And so you've got to believe that folks are going to stay with them and that they're going to use AI again to make it a more effective relationship. So, and I think you're going to know that sooner rather than later. So keep your 2 weeks come the earnings,
Right.
and I think by the fall we'll be better than we are now.
So then let me ask you then, yesterday, the top performers were private equity stocks after that NVIDIA announcement.
Right.
They've been under pressure. That first chart explains why they've been under pressure. Doubts about how much debt they own, the software debt. Are they out of the woods yet?
I don't think so, Charles, but I'm not sure. So my manner of investing is I'm chicken and I run away to live to fight another day. So I want to pick things I consider more sure things. Now, these guys might be okay, the private equity and private debt guys, but they might not. So I'm unclear. A lot of software loans out there.
Right.
Not all of them are going to be as good as ServiceNow and CRM. So I wouldn't go there, even though they might be okay. So.
Well, listen, retreating is a good strategy sometimes.
Right.
George Washington did it a couple times.
Absolutely.
We turned out okay. Compute is king. That's starting to emerge as something that everyone accepts. And these are names you've already shared with us. I mean, I got to give you big props, particularly in Microsoft. I mean, you came, and when this stock was getting hammered, I think we have a chart of it, and you were like, no, buy the stock.
It was 16 times, man. Yeah, no, that's terrific. And the thing that is, they get a bad rap for spending a ton of money. I get it. But one, they can afford it. They got the best balance sheets in the United States. But the second thing is, look, Google's cloud business grew 82% year on year. If you were running that business, you were capacity constrained, you'd beg, borrow, and steal to invest more in that business.
So, Chris, value guy, you're telling people it's under 400, it's around 360, 370, buy this stock.
Right.
It's at 500 now. Still value?
Yeah, remember, I'm a 3-year guy.
Okay.
So, I wouldn't jump to it today, but I would have no problem buying this on dips and holding it for 3 more years.
Now, conversely, there's a couple names that are dipping or sort of still struggling a lot. Meta, Oracle. You're concerned about this.
I am.
Because a lot of people are buying this or hoping that they come around ultimately.
Right. So as I said before, compute is king. If you can control that, you're in good shape. And the big three guys that we just talked about too, these guys have compute too, but I don't think their AI strategies are nearly as compelling as the other three. So in the short term, their compute will get them through, but I'd rather own the other three than these two right after that.
By the way, every Friday we do an all-star shout out. And I don't know, somehow we might have missed you last week, but last time you were on the show, Boston Scientific, AbbVie, both double-digit gains in a short period of time.
Right.
Good stuff, my man.
Hey, thank you, Charles.
All right.
Good to be with you.